All right, everybody, ready to dive into some technical analysis?
Let's do it.
This will be fun. We're talking Stan Weinstein today
Yeah.
and his book, Secrets for Profiting in Bull and Bear Markets. You know,
Right.
I think
Yeah,
for those of you who maybe are new to technical analysis, this is a great place to start.
it is, yeah.
He's got a really clear writing style
Yes.
and
It's there.
lays out like really, really clear strategies. And I think that that's great for, our listeners who are
Absolutely.
wanting to like take action and not just,
You
read
each-
theory all day.
It's very practical.
Yeah.
Like you can finish reading it
Yeah.
and immediately implement something,
Totally, totally.
Is
So
that great?
let's jump right into it. So at the core of his whole system is something he calls stage analysis. Have you heard of this?
Stage analysis, yeah. It's like I always imagine it as like a stock's life cycle. Like where is it in its
Right.
whole, lifespan?
Instead of just seeing all those lines on a chart, right?
Yeah, exactly.
Yeah.
It gives you like context.
Yeah.
Like what does this all mean?
Totally. So walk us through these stages.
Yeah.
Like what's the first, signpost that we should be looking for?
So the first stage is what he calls basing.
Okay.
And just like it sounds, that's when the stock is kind of just, hanging out. It's forming a base.
All right.
It's not making these huge moves, but it's getting ready for,
Right.
potentially a big move.
So it's like recognizing the quiet before the storm.
Exactly. Yeah. It's that quiet period where it's just like building up energy.
Okay, got it. So that's stage one, the basing stage. What happens next?
Then we move into stage 2, which is the exciting part.
Okay.
That's what he calls advancing.
Okay.
So that's when, you start to see the stock really take off,
Got it.
making higher highs and higher lows,
Right.
really establishing that upward trend.
That's where we want to be, right? Riding that wave.
Exactly. Yeah. You want to be on board for that ride.
Awesome. All right. What's next?
Stage 3, and this is where things can get a little tricky.
Okay.
This is the topping stage.
Topping.
So the stock has had a good run.
Right.
It's made some nice gains.
Yeah.
But it's starting to, level off.
Mm-hmm.
Might even see some warning signs.
Oh, okay.
Maybe it's not making those higher highs anymore. Maybe the volume's starting to decline a bit. Yeah.
So this is a critical moment where investors could easily misread the signals.
Oh, absolutely. This is where a lot of people get caught slipping.
Right.
They think it's just a pause,
Right.
It's just taking a breather. It'll be back.
It's going to keep going?
But sometimes it's not. Sometimes it's actually, topping out.
Gotcha.
So you've got to be really careful in stage 3.
Okay. And then that miscalculation leads us to
Unfortunately, yes.
stage 4.
Stage 4, the declining stage. And just like it sounds,
Oh.
that's when the stock starts to, head downhill.
Right.
And you don't want to be, holding the bag when that happens.
Okay. So we've got stage 1, basing.
Right.
Stage 2, advancing, which is where we want to be.
Yep.
Stage 3, topping, where we've got to be very, very cautious.
Very cautious, yeah.
And then stage 4, declining, where we're heading for the exits.
Exactly.
Okay.
That's-
This is already making a lot of sense. Like it gives us a really good kind of big picture framework to look at these stocks. Now, he doesn't just leave us hanging with these stages. He also gives us some tools to use.
Exactly.
And one of the big ones that he talks about is the 30-week moving average.
Yes.
So what's the significance of that particular moving average?
So the 30-week moving average, it's all about like filtering out the noise,
Okay.
right? Because if you look at a stock chart every single day,
Right.
it's like up a little, down a little. What does it even mean?
Right.
So the 30-week, it's like taking a step back and saying, okay, what's the overall trend doing?
Instead of getting caught up in every little blip, we're looking for the real. Exactly.
Rinse, right.
Exactly, yeah. Seeing the forest for the trees.
Okay,
Is this thing actually trending up?
got it.
Or is it, just bouncing around?
So it helps us determine if a stock is really in an uptrend, in a downtrend, regardless of
Yeah.
those little, like,
Yeah.
day-to-day, fluctuations.
Yep. It helps you smooth it out and be like, okay, what's really going on here?
I like it.
And it's something that's really easy to apply. I mean, you can find it on almost any charting software.
Totally.
So you don't need, like, fancy tools or anything.
Yeah, I mean, it's right there.
Yeah.
Most basic charts.
Mhm.
Awesome. So we've got our roadmap. We've got this 30-week moving average
Right.
to kind of like smooth things out for us.
Exactly.
But how do we actually find?
Those A+ buying opportunities.
Right.
That's what we really want to know, right?
That's the million-dollar question.
Yeah.
And, Weinstein talks about this. He says the absolute best time to buy, like hands down,
Okay.
is when a stock breaks out of that stage 1 base
Okay.
on high volume and moves into stage 2.
Gotcha.
And he uses this analogy of like a coiled spring.
Okay.
You know, it's been compressed. It's been like sitting there, and then boom,
It explodes.
all that energy is released.
Got it.
And that's what you want to see in a stock.
Okay, so it's like our hiker finally, like, they've been hanging out at base camp, getting their gear ready, and then finally it's like, all right, we're going up the mountain.
Exactly.
Love it. And the cool thing is, we can actually see this happen, right? Like in real life.
Oh, yeah, absolutely. Weinstein gives some great examples in the book.
Okay.
One that comes to mind is Allegis Corporation back in like 87.
Okay.
The stock had been basing for like, I don't know, a year or so.
Okay.
Broke out of that stage 1 base, huge volume.
Yeah.
And then, boom, shot up like over 30 points in a very short period of time.
Wow. See, that's what I'm talking about. Okay, but
it's amazing.
What about, like, I'm not glued to my screen all day.
Right.
What if I miss that initial breakout?
So here's the thing. Weinstein points out that very often you'll get a pullback to that breakout point.
Got it.
So it's like, the stock shoots up, takes a breather, comes back down a little bit, and that is your second chance to get in on that trade.
Okay, so instead of fearing that pullback, we can view it as an opportunity.
Absolutely.
Like a flash sale.
It is, yeah. It's like, okay, things got a little heated, things cooled off a bit.
Right.
I can jump in now.
I love it. Okay. But investing is a two-way street, right?
It is.
We've got to know not only when to buy, but also when to sell.
Very important.
We climb the mountain. We don't want to fall all the way back down.
Exactly. Exactly. You don't want to give back all those gains.
Exactly. So how do we protect those profits?
So Weinstein is a big fan of something called a trailing sell stop.
Okay, a trailing sell stop.
And you can think of it as like guardrails, right, on a mountain road. So you're driving up this mountain. It's a winding road.
Right.
And you've got these guardrails there just in case.
Right, to keep us from going over the edge.
Exactly. You don't want to go over the cliff. So a trailing sell stop does the same thing for your stocks.
So it's like we're letting our profits run, but we're putting a safety net in place just in case things reverse.
Exactly. Exactly. You're letting that trend play out.
Right.
But you're protecting yourself on the downside.
I like it. What about on the other side of the coin? Like when things are going down.
Right.
What does Weinstein say about like averaging down?
This is important. He is adamant about never, ever averaging down in the stage 4 downtrend.
Really? Okay. Why is that? It seems like, if something's cheaper, you buy more of it.
It's tempting, right?
Yeah.
It's like, oh, it's on sale. Let me load up.
Right.
But he compares it to, like, imagine our hiker again, right?
Okay.
They're stumbling down this mountain.
Yeah.
They're losing their footing. Do you want to give them a heavier backpack at that point?
Oh, no. That just makes things worse.
Exactly. It just makes it harder for them to recover.
Okay.
So sometimes you just got to cut your losses.
Right.
And live to fight another day.
So it's better to take that small loss, maybe, lick our wounds a little bit.
Exactly.
But then find another opportunity, another mountain to climb.
Exactly. Yeah. Exactly. You'll find another trade.
Love it. Okay, so we've got our 4 stages, right?
Yep.
We've got those explosive breakouts. We're using trailing sell stops to protect those profits. We're knowing when to walk away. When things are going south, what other key takeaways should we be thinking about?
So Weinstein, he hammers this home throughout the book. Volume is key.
Okay, volume.
Volume is king. He even says that.
Volume is king.
Volume is king. And the way I think about it is it's like fuel for a rocket ship.
Okay.
You need that fuel to break free from gravity.
Right. So we're not just looking for any breakout. We're looking for one with like a real surge of volume.
Yes, exactly.
To confirm like the move is the real deal.
Exactly. High volume means there's a lot of conviction behind that move.
Gotcha. What about relative strength? I hear that tossed around a lot in investing circles.
Relative strength is huge.
Okay.
And it's basically just a way of seeing how a stock is performing compared to the overall market.
So not just looking at it in isolation.
Exactly.
Yeah.
Because a stock could be going up.
Right.
But the overall market could be going down even more.
Right.
And that's not really a winning stock.
Okay.
So we want stocks that are outperforming the market.
So instead of just looking at a stock by itself, we're comparing it to like a benchmark like the S&P 500.
Exactly. You want to see it like outperforming whatever benchmark you're comparing it to.
Got it. Got it. Now, speaking of like patterns, right, and momentum, one pattern that Weinstein seems to really like gravitate toward is this head and shoulders pattern, I'll admit.
Yeah, it's a classic.
I've always found this one a little tough to, like,
it can be tricky.
Consistently spot.
Yeah, it takes some practice.
Yeah.
But basically, just like it sounds, you're looking for like the outline of a head and shoulders on the chart.
So it's literally like visually.
Yes, it should like
head and shoulders.
Head and shoulders.
Okay, got it. And is that like a bullish or a bearish signal?
So typically a head and shoulders pattern forms after a downtrend.
Okay.
So it's actually a potential bullish reversal signal.
Okay, so it's a sign that like maybe the selling pressure is drying up.
Exactly. Yeah, it's like that last gasp of the sellers.
Okay.
And then, potentially the buyers are going to step in and take control.
So we see that head and shoulders, that's like, oh, maybe a good time to like.
Could be. It's not a guarantee,
right?
But it's definitely a pattern you want to pay attention to.
Okay. Now, before we move on, there's one more thing I wanted to touch on. Weinstein mentions this thing called the 4-year presidential cycle.
Oh, yeah. Interesting observation.
What is that? I'd never heard of that before.
So basically, it's this idea that the stock market tends to perform differently.
Okay.
Depending on where you are.
Yeah.
In a presidential term.
In a presidential term.
Yeah.
Yeah.
So, for example, historically, the 3rd year of a presidency has been like the strongest year for the market.
Really? Okay.
Yeah. And there are different theories as to why that is.
Right.
But it's an interesting pattern.
That is fascinating.
Yeah, it's just something to like kind of keep at the back of your mind.
Okay, so maybe some extra bullishness as we head into,
potentially
that 3rd year of the current term.
Yeah, but I wouldn't base my entire investment strategy on it.
Right, of course.
It's just one piece of the puzzle.
It's all about putting it all together.
Exactly.
Not getting like too focused on one thing.
Exactly, yeah. You got to look at the big picture.
It's like, we don't want to have tunnel vision, right?
Yeah.
We've got to look at all these different factors.
Absolutely, 100%. And I think that's what I really like about Weinstein's approach is he's not just giving you like a bunch of indicators to memorize.
Right.
He's giving you a system.
Yes.
A way to think about the market.
Yeah. And a way to like manage risk. Right.
Absolutely, yeah.
Yeah.
Risk management is huge.
Which honestly, I think that's something that like a lot of people, especially beginners, maybe don't.
Right. Think about enough.
They overlook it. They get so caught up in like making money that they forget about like
I could lose money.
I could lose it all.
Right.
Right. Exactly. And Weinstein, he's been there. He talks about his own mistakes in the market.
Right.
He's lost money. Everyone has.
And it's refreshing to hear someone like who's been successful also be willing to like admit their mistakes,
Yeah.
It makes him more human, right?
It does. It makes it more relatable too, because it's like, okay, this isn't just some like guru on a mountaintop. Like he's been in the trenches.
Yeah. All right. So final thoughts.
Okay.
I think we've got our roadmap. We've got our tools.
Yeah. And I think most importantly, we've got like the right mindset now to actually go out there and,
Yeah, you got to have the right mindset.
Start applying these things.
You do.
Any parting words of wisdom for our listeners as they,
Don't be afraid to make mistakes. I mean, you're going to make them.
Right.
It's part of the game. But
learn from them.
Learn from them. Exactly. Like Weinstein says, every hand's a winner and every hand's a loser. It's just how do you react? How do you react? Exactly.
Love it. Okay. Well, this has been awesome. Thank you so much for diving into Stan Weinstein with us today.
Yeah, thanks for having me. This was fun.
This was great. And for our listeners, keep exploring, keep learning. We'll catch you in the next one.